Right. Hello, everyone. Welcome to ULT. I wanted to do a quick video today at the end of the week. It's Friday, the 26th of April. And I did a video earlier in the week, maybe Monday, Tuesday this week, where I kind of updated my open range break strategy parameters. Went through some examples. And I wanted to go back through the week now that the week has ended. And just let's look at where the entries would have been if you watch my live streams, which I'm live streaming every single day. You'll see that I don't take these entries as efficiently as I could. So I want to go back through. I want to look at where the perfect sort of textbook entries would have been and how they would have worked just for the week. So it's going to be a pretty quick video here. So we're going to start with Monday. The only thing that I've got on my screen is my open range indicator, which shows the high and the low of the first 15 minutes starting at 7:20 Central Time to 7:35 Central Time. So 8:20 Eastern to 8:35 Eastern. And you can go back and watch my video where I kind of break down the parameters of the trade. But essentially, I'm taking a retest or a break of that midline, and I'm looking to hit 100%. 100% kind of extension of that range. Okay. So let's look at Monday. Monday, the open range formed. We pushed down. We didn't really get a nice retest. We got what I call a wrap of that midline. Now, this is riskier because to short this right here, you have to kind of have some other context clues going for you. So that's why I put this line on the chart. This is the 21 SMA off the 5-minute chart. So it's the 105. And you can see it up here if I move the drawing tool down. It's the 105 SMA, which is meant to duplicate the 21 SMA off of a 5-minute chart. And this is just essentially showing us trend. So the trend is down. So the ideal entry here would have been to wait until we close below the midline, we close back above the midline, and then we look for a short right here. It does short. It breaks through the bottom of the range. Once price hits the bottom of the range, we would move our stop to break even. The stop on this trade at entry would have been behind the most recent pivot, which was here. Okay, so one tick below this bar is the entry. I don't know if that's exactly one tick, but oops. Let me grab a line. I don't know if that's exactly one tick, but you get the point. There's your entry. Here's your stop. So risk is 18 ticks. The target would be 99 ticks. So if you're into risk reward, that's pretty good risk reward. Once price breaks below the range, move our stop to break even. This hits just fine. We do get a second entry opportunity either off of this retest to hit the original target, or if we miss this, you could get in off of this retest of the open line and the red line. I get hesitant on candles this big. Your risk would have been 31 on this trade. Not a trade I probably would have been comfortable taking, but it works nonetheless. Okay, so Monday is a win. Again, I don't believe I took that trade, but we're just looking at what would have happened had we played the strategy just mechanically. Excuse me. All right, Tuesday. Open range forms. Red line tells us we're sort of uptrending. Open range forms. We don't get an entry before it breaks out of the top. I never take just a straight break of the top of the range. They fell too many times on me. Sometimes they work really, really well, but I don't take them. We break down below, no entry, kind of hover, break below, no entry. Here, this is where it gets kind of tricky. We have one candle of space here. So we're looking for a retest, right? So we broke above. We're looking for a retest back to the open line. or the top of the open range here to take a long off of it. Okay, so this is the pattern that we're looking for. Right here, we're just hovering the line. No entry, no entry, no entry. This one would technically, this would be, I would say, a lower probability entry, but it does fit my rules. I don't really have any rules in terms of what's the space, right? What kind of a pull away from the line do I want to see before a retest? This is a really good example, though, of one that works well versus one that works, but not as well. Right here, we have a push above the line, a pull back to the line. We do have space with this candle. This candle closes above the line. So we would say we have one candle of space before the retest. So you could take the break of this, you know, basically trail your entry above these candles. Boom, 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 boom. You'd get ticked in one tick above this candle, right? Your stop loss would be below the most recent pivot low, which is right here. Again, not ideal, right? The more space you have here, the better. Okay, so for example, this would have been great had we bounced because we had a lot of space, but it didn't bounce. It fell through. So once a candle falls below here, there's no entry. We got to wait for kind of a good setup here. This one, you know, this here, we do have space, but it's only like one tick of space in these two candles. That, as far as I'm concerned, that's on the line. So this would have held and does get us to our target. You can see if you missed this entry and you waited, now you have 1, 2, 3 candles of space. And you would have got in almost at the same spot, you know, literally a tick or two higher. Your stop loss would have been at the same place, but then it pulls away pretty easily. Let's see how our trade management rules would have played out here. So we'll put some basic extensions. All right, the way that I would play this is because we're playing outside of the range, once price hits this 50% line, I would move my stop to break even. So had we entered here, we would have been in it. Here is the point where we would have moved stop to break even. And then 3 candles, 4 candles later, it jumps up, hits our target. Obviously, this one runs a lot further. And you'll see this a lot where it does, you know, if it's on trend especially, you'll see it oftentimes go back to the overnight open. As it was, entry here to the target, which would have been on this candle here, 50 ticks. And there you go. It worked. Never came back again for a retest. So that was the trade. No failure, little bit of heat, but it worked, right? You'll see these oil trade, or not oil, this is gold. These gold trades can be a little bit choppy, so you do have to sort of sit through a little bit. All right, here's one, and I think I took this one, if I remember right. This one, we come up, the red line's telling us there's no real trend. We're just kind of going sideways. We have a news candle here. We come back down. This is hard because you can't see. This is actually, and I talked about this entry in my live stream today, actually, because we had a similar setup that actually failed today. But this one, it came up, we create the open range, we come back. This candle tests below the midline and pulls up hard, closes above here. So I would still get in on this. Entry, 1 tick above the candle to test the line, which is this one here. You get 2 candles of hesitation, and then we take off. And this is in, I'm going to drag these over like this. So in a case like this, where the overnight open is in the way, then I would have my target at the overnight open. I wouldn't hold it to the 100%. Sometimes it'll blow through, but oftentimes you get some resistance, as we did here. If you did wait, it did eventually get there. How did the trade management rules play out in this case? If we got in here, once this candle broke through, we would have moved our stop to break even. So our stop was never threatened. And then we hit the target, which would have been the overnight open. So from entry to target, 60 ticks. It's a winner. That's really the only trade for the day. I mean, you could have taken this trade. We did retest the top of the range with the overnight open right there. You know, I didn't take this. Well, actually, I might have taken this trade, but I got out because it was just chopping sideways. Because you can see how we just bounce between the top of the range and the overnight open. So whenever you reach the overnight open, you usually get some kind of consolidation resistance, or it just, you know, rockets through. More often than not, you get resistance. So I don't like to mess with it much. You can see it tested a couple of times. And eventually, when we did hit a run, it came off of the top of the range. You know, so if you just wanted to hold out here to see what you could get, you could have taken almost every one of these retests of this opening range. And eventually this one did take off on you, but first trade in the morning worked, would have been done for the day. Actually, I was done for the day. This trade, I'm pretty sure I took this trade. I'd have to go back and look, but I think I took it for 3 contracts. I got like 1,800 bucks out of that guy. You can go back and fact check me, see if I'm making things up. All right, this is Thursday, 425, sideways price action. We have, and this is a trade I took. So these are examples of what I did right, and then we'll get to today where I did not follow my rules and I missed out on some amazing opportunities. So here we have news that creates the open range, but we're just going sideways. So in this case, we're south or we're below the midline. I'm probably not going to take a rejection off of this just because we're consolidating, right? There's no real pullback that takes us back to that midline. The good news is, even if you didn't want to overthink it, if you have your entry below, right? If you're looking to short and you have your entry below each of these candles, you never get ticked in. So you're safe the whole time. Once a candle closes above the midline, obviously you're not looking to go short anymore. Now, this set up really nicely. We had a pull above the midline. We have space, 1, 2, sort of 2 candles. This one touches. And then here you have, not only do you have a test of the red line, a test of the midline, you also have this nice reversal pattern in the candles, which I like a lot. So the entry is the break of the candle that tests the midline right here. Obviously we don't hit 100%, right? Now, one of the things that you run into, and it's not really on this chart, but there's a 15-minute fair value gap up here. Okay. If we went to the 15-minute chart, we would pull that out and see it. And that's kind of where we run into resistance. But at the minimum, what we would have done if we'd have just mechanically played this out is once price broke the open range, we would have moved our stop to break even. So this would have been a break even trade. I think I was looking for 60 ticks, which I think I got, right? It ran for 64. So I did get my 60 ticks. So this was another $1,800 trade for me, but worst case, you get stopped out. One of the things you can look at on these is depending on the size of the range. I mean, 36 ticks was the distance from the entry to the top of the range. That's a pretty good move, right? This is a 90 tick range. So that's a big range. So I generally keep that in mind. With a bigger range like this, I might really only look for this 50%, right? If I was going to hold out versus the 100%. All right. So that was that way. If you stuck around, we have a failed breakout. Essentially, we break below the midline, back up, touch the midline, and a nice reaction to that too. So this is a valid entry. And same rules apply. We touch the bottom of the range, move our stop to break even. We would be safe. It is a little choppy. Let's see where the extensions take us. depending on how greedy you wanted to get. I said before I would probably only be looking for this 50% range here, or mark here, which is 74 ticks. That's a pretty good move. But we have the overnight open, which we know is a magnet, and sure enough, it draws right to it, which is right in the vicinity of our 100%. So again, we hit 100%. Is that every day this week we've hit that 100%? Hit it. Hit it. Hit it. Boom. Okay, so we're hitting it every single day. Every single day. And let's look at Friday. Today, which I traded really, I didn't trade well today. But it wasn't the strategy's fault. So this is where when they say you can't go broke taking profits, well, I went broke today taking profits because I took my profits really early, essentially not taking anything when, you know, I would have been fine. So here we have the open range formed. We come back to the midpoint, and this happens right after, you know, here's 735. We're back at the midpoint. This tests it, pulls back up. You could get in right here. Call it, oops. All right, these lines are a pain in the butt. Anyway, one tick above that candle, which is roughly where that line is. And this one obviously fells the top. Again, there's a 15-minute fair value gap here, which is holding. I talk about that in the live stream. Trade management rules would say once price breaks the open range, you move to break even. So this would be a break even stop out if you didn't take profit up here. Then we come back down to the bottom, back to the top. Boom, boom. We're bouncing down the middle. Oops. So this is, remember on Wednesday, we had that strong, so let's go back to Wednesday. Or no, it was Thursday. No, it was Wednesday. So remember on Wednesday, we had this strong up close candle, and we took the break of that candle, and it was a successful trade. We had a similar situation today, although it was not successful. Okay, so here you have, we've come back down. This candle just taps the mid-range, strong close, and then rolls back over. Okay, so if you would take, let's say you took the break of this candle here, because that would have technically been a valid entry. And then you have your stop below. All right, you would have been stopped out if you'd have just done nothing. And that would have been 25-ish ticks. So let's call that a 25 tick loss. So break even, 25 tick loss. My only comment here is you see these, I mean, we're getting lower lows, so that might be a reason for you to wait. Anyway, let's say that fells. No worries. Break below the midline, back up, we tap. How many times have we seen this? Boom, and it drops. Take the break of this candle here. Okay, stop loss is above the pivot, which is also above the midline here. 16 ticks. We are 27, 28, 27 or so to the bottom of the range. Once we hit that, we move our stop to break even. It does chop sideways for a while, so this one's, you know, messy. And then we eventually fell down. We break through this 50%. We retrace all the way back up. Okay, so this would, if you didn't take any profits down here, this would have stopped you out. Okay, so let's say it's a stop out. Well, actually, hold on. I lied, because once we get to this 50% line, then I'm moving my stop up to the open range. Okay, so this doesn't really come up in any other days because it just kind of blows through this point, but we're going to hit this 50%. So from our entry, that gives us 27. So we basically get stopped out for 27 ticks. All right, so we're down 25, we're up 27, or add 27. So now we're net positive 2, basically break even. We do come back up. It doesn't come back up to the midline, but we do have a nice rejection off of the red line. Beautiful reversal pattern in the candles to confirm that. And I mean, there's some other things we could look at too. There's a fair value gap. There's some other things, but if we just go off of that, take the break, fails down, we hit the bottom of the range, we move our stop to break even, chops around for a minute. Eventually over here, it hits 50%, so move your stop to the open range, and eventually we come down to the 100%. And the gold line, or the overnight open. But let's say you just did 100%, so that would be 104, so you'd be up 106 on the day. If you'd have traded the strategy, just take your entries mechanically. It's what I need to do. So overall this week, the strategy worked great. I mean, it takes a little faith in it because sometimes it does kind of chop around and you can take some losses. But again, the point of this strategy is you're looking for kind of big runs. You're not looking for little 20 tick scalps, 30 tick scalps. You know, you're looking for 60, 80, 100 ticks when these work. So sometimes it takes 2 or 3 tries for it to get there. But if you're following the clues that the chart gives you and you're just taking those mechanical entries, you're going to be pretty safe. You know, we had going back through this, 1 loss all week. If we'd have a couple break-even trades, but only one loss, I mean, that's almost ridiculous, right? Now, it does require you to be kind of on top of your game and to be very quick on those entries, and then just sit and let them go. So that's what I'm going to try and do next week. I'm going to try and actually trade my strategy the way that I have it laid out, and not try to second guess the chart and not jump out of trades when I think it might go against me, because most of the time that's just what gold is doing. It's trying to scare you out of it before it goes where it needs to go. So that's the summary. Open range break in gold for the week of the, whatever this week is, the 22nd of April. So hopefully y'all had a good week. Have a great weekend. We'll see you tomorrow. Or we'll see you, not tomorrow, Saturday. We'll see you next week. Bye-bye.